Dan, Craig, welcome to the podcast. It's great to have you both on. Um, Today we're going to dig into NRR, one of our favorite topics, I think, collectively here. You guys just completed some fantastic new research jointly across both SBI's research function, which Craig represents, and QuadSci, which Dan will represent. I think this is fantastic research, you guys. Very timely, very relevant. Would love to dig into what we're seeing in the world of NRR and really understand what's happening, one. And two, what are some of the best companies out there doing right now to combat these immense pressures on NRR? So glad to be working through this today with you guys. Craig, maybe we can start with you and just lay out a picture of what we're seeing happening in the world of NRR right now, because it's kind of a bleak picture, isn't it?
Yeah, this is one of those things where we heard from clients and we heard in the market. And when we started digging into what's actually going on in NRR, it affirmed a lot of things we're hearing, which is there's been this shift where for a number of years, the mandate was grow, just grow revenue, and we'll worry about it later. And it shifted to this, we need to grow profitably. We need to have durable growth. And part of that change we're seeing is that NRR for a lot of companies has just been on a downward trajectory for the last 2 years. I'll throw some numbers at you, but really it's the overall trend that matters. So NRR since Q1 2023 has dropped from 110.5 down to 107.1 on average. And what's interesting is we're seeing that drop across the spectrum. So excellent companies, those with NRR above 115 are dropping. Average companies, they're all going down. And the overall trend is that for 58% of companies, they're reporting lower NRR than they were 2 years ago.
Yeah.
And this is having just huge impacts on what it means to grow and how you try and find growth in today's market.
Yeah, no, and let's dig into some of these causes here for sure, because I think there's a lot going on. But Dan, curious for your take, and obviously you guys have a unique perspective with your capabilities, your tools that really sit at the center of this NRR challenge for your customers. But what are you seeing happening? What's driving this down so much?
I mean, that's exactly why we founded QuadSci, right? You look at financial services, insurance, healthcare, all these other industries have massive amounts of data that they've been able to detect and find and operationalize these patterns and how they engage and lead customers. Software companies have this super unique advantage of telemetry data, right? Users are logging in, navigating, clicking. Anytime they're coding something, that's generating an observability metric, a product analytic event. But that data is very large. It doesn't mean anything. And so how can you find those patterns and understand what that means? And in the software business, how people use your product is directly tied to the value that they perceive from it and their willingness to spend money. So we founded QuadSci to fundamentally understand how people are using your technology. What does it mean for your business? And how can you unlock and unleash those signals for go-to-market to be prescriptive, either through digital motions like co-pilots and app guides, email, or the CSM or the AE doing the right thing at the right time that has a ton of context for that customer and they lean in. So long story short, you got to understand the patterns of software. And that's a very unique use case for some pretty hardcore AI that we've developed.
Yeah, no, and I think what's interesting is as we look at software, it provides, to your point, this massive amount of data in terms of, not only just sort of classic customer experience metrics, but more importantly, product consumption, product usage. And I think there's things to learn even beyond the software industry from what we're finding and what we're understanding. And I know that there's significant efforts underway with both of our companies to also bridge into understanding more tech-enabled services businesses, understanding other verticals. But I think there's a lot that can be gleaned irrespective of the vertical you happen to play in. Is that fair to say?
Yeah, I mean, whether you're a tech-enabled services business, whether you're a bank, software is generating more and more data.
Yep.
In the case of B2B software or B2C software, right? There's a direct exchange of value, a subscription that people are paying for. But software is representing the customer experience more and more. Every industry. That's not slowing down. That's only accelerating.
Yeah.
So fundamentally, you need to be able to understand these usage patterns that exist if you're going to show up in the right way at the right time with the right context. So very much we see this growing out of the software industry, but it's a very interesting thing to study the software industry because of the fidelity between data and the performance of the business.
Yeah. That's a great point. So you mentioned these patterns, Dan. I want to dig into the availability of these data points. There's just an immense amount of data. And I think for many organizations, sort of capturing it cohesively, understanding what's happening within, I'll just call it this tapestry of data points, right? Be it customer experience data points, be it commercial data points and commercial interactions, be it things like Net Promoter, CSAT, technical support tickets. And then as we started talking, more extensively about here, product engagement and understanding product telemetry signals, just an immense amount of signals. How is it that you're finding, I guess the potential for noise is very high here, and you're finding good signal from the noise in such a way that, if I'm not mistaken, I think you're able with the capabilities you have to predict churn with 90% accuracy, roughly a year in advance, which I think is phenomenal. So how are you guys finding your way through all these data points and really isolating the signal and the patterns, to your point, with just immense amounts of data that everybody's sitting on right now, irrespective of industry or business type or maturity of business? We're all sitting on a ton of data right now. What are you guys finding?
Yeah, I mean, that's our batting average, right? 90% of churn, 90% of growth events 12 months out. And it's been really cool to see those numbers be quite durable. When you talk about the availability and the volume of data, again, especially in the software industry, site reliability engineers, they're great at what they do. An extreme majority of software companies are operating in SaaS architecture now. You have to observe and understand if those applications are up and running, if they're secure, what's going on there. So there's all these observability metrics that already exist. The challenge is that data was never intended for go-to-market. Similarly, with things like Pendo, Mixed Panel, Amplitude Heap, product and marketing have always kind of been trying to understand user journeys, these events, these login activities, these feature activities, but it's not merged with the business outcome. So as much as you'll hear me talk about product and telemetry data, it really is all of the data.
Yeah.
You need to understand what's going on in your CRM. You need to understand the support patterns. You need to look at these call transcriptions, sentiment, NPS, all of those types of things to get this coherent picture. But again, back to this telemetry data, I mean, we're breaking 7 trillion events that have gone through our AI for our customer base. That creates a very, very deep ocean that allows AI to find some pretty unique and powerful patterns, especially when you merge in all that other data and you have the context of what do these patterns mean for what's going to happen to ARR? What do these patterns mean for the trajectory accelerating or decelerating in terms of usage? And what are the specific patterns that every customer has and how they're using this technology and where should they go next? Based on how they look compared to the people that have grown in the future or churned. And so by putting all of this together, you can get a ton of performance, a ton of accuracy by getting this data together.
Yeah, no, it's fantastic. And I think what's really interesting, and Craig, maybe get your take here, is with all this immense amount of data that Dan's talking about, I think the reality is if as we kind of take these signals and impart them to our frontline teams and say, okay, here's how you want to engage different accounts. Here's kind of the plays to run depending on the situation. I think the reality is, Dan, to your point, historically in go-to-market functions, we've shied away from kind of consumption, engagement patterns, really understanding at a technical level how our customers engaging with our services, engaging with our products. And there's an immense amount of sort of direction and understanding that we can use that data to apply to account management, apply to customer success management. But Craig, I think it's probably safe to say most AMs and CSMs are not experts in end user product telemetry patterns and what to do with it. So how do we translate this data into more of a commercial use case?
Yeah, that's a great question, because what Dan and I found with this research and was so interesting is, you're right, commercial teams have all the information they need to make more efficient and more productive decisions on who to engage and when. But historically, the data just hasn't been in a usable format. So all of this telemetry data, all of this usage data you're talking about, it's hugely powerful, but there's so much volatility in it. It makes it really hard for commercial teams to actually turn it into an actionable tool. So when you think of this telemetry data, like it's not a straight line. It's not even a consistent line for most companies. It shoots up and down quarter over quarter, month over month, which
Sure.
for account teams, they're like, how do we use this? So what we did with this research is we took all of this telemetry data. And Dan, you can correct me if I'm wrong. I think it's about 160 billion points across 9,100 accounts. So we were able to look at this massive set over entire customer life cycles. And we thought, how do we smooth this out? So we ended up taking all of this usage data that companies already have. So they have the data, and we applied a second level to it, which we call usage consistency. So what usage consistency does is it's showing how predictable is this usage level over time. So this telemetry data, what is the pattern hidden within it? Is it inconsistent, where there's not really a good pattern and it's shooting up and down? Are we starting to see a pattern? Like, is there starting to be something establishing? Or is this an account where we can say, yeah, that's predictable?
Yeah.
And something really cool happened then that made this data actually usable for account teams, which is when you look at those two dimensions, natural clusters form that tell you a ton about the accounts.
So these natural clusters, tell me a little bit about what we found there and what these natural clusters mean from a go-to-market standpoint.
Yeah. So what is really cool is these natural clusters. What they tell us is that there's certain behavioral patterns for all of your accounts that are hidden in your data. And when you look at them in these dimensions, you can see those patterns. And what it does is it tells you that for most companies, your accounts are going to fall into one of 6 buckets. And these buckets we call cohorts. So there's 6 of them. And I'll run you through them really quick because I think when I talk through what they are, it'll make their actionability and their importance super clear. So the first cohort we found, we call these explorers. These are where every new account forms. And what an explorer is it's a new account, so they don't really have a pattern of their data usage yet, and the data usage is low. And as you onboard them, as they ramp up, they'll shift into a new cohort, and there's really 2 paths they can take. The path we want to see them see is we want to see these explorers turn into something we call converts. So what a convert is it's the first cohort where they're using your product in a way that indicates renewal. They're the ones who are getting value out of what they purchased. And from the convert status, then the next cohort we found is something called an enthusiastic adopter, where they quickly scale usage. So they're seeing a lot of value, they're likely to renew, and what we're hoping to do is settle in that pattern. And if they settle in that pattern, they become a power user. So a power user is they love you. They really, really do. They are the perfect match for what your ICP should be, and they're using your product a lot in a consistent way. So that's the good path. We have these four cohort track from explorer to convert to enthusiastic adopter to power user. What's the bad path? Well, an explorer onboards and they don't start using your product, or they aren't using it consistently. What we call those are strugglers. Strugglers are people who they have low usage patterns, and this is a warning sign. A struggler is likely to churn. And finally, if you don't engage those strugglers and you don't turn it around, they become disconnected, the 6th and final cohort. Disconnected accounts, you're really your shelfware. They're not using you in a meaningful way. They're not engaging. This is one where they have your product, but they may not. Most people in the company may not even know it. And this one, churn is almost definite.
Interesting.
So we have these 6 cohorts, and account teams can use these in a lot of ways. The first is that these cohorts are what Dan was mentioning, tell you with 90% probability which accounts are going to renew and which accounts are not, and which accounts are likely to grow. So the beauty is these cohorts, they divide your account base in every account into 2 groups. The zone of expansion, where account teams know these are the accounts they're likely to renew. So we can focus all of our growth efforts, and a zone of contraction, where these accounts, they're going to churn if we don't do something. So we need to focus. And that really is how you can better prioritize and better engage with accounts in a more efficient way.
No, that's fantastic. And Dan, maybe let me get your take on this. So we've got these 6 cohorts that simplify the world down. And I don't want to say simplify. That's probably not the fairest way to think about this, but these kind of rationalize many, many different ways one could look at accounts. And I think, part of at least my observations lately is we've got these significant disconnects often between AMs, AEs, those who own the account and the account management and are responsible for ultimately, end of the day, renewal and expansion, right? The NRR on the account. And we've got these CS, these customer success functions, that oftentimes don't necessarily have the clearest mandate. Sometimes they're responsible for renewal. Sometimes they're gold on renewal, but not necessarily accountable for it. Sometimes they're involved in expansion, sometimes not. But typically, these two teams don't necessarily swim together and coordinate actions simultaneously. So my assumption here is using the cohort type of model provides clarity across the entirety of an account team to say, okay, we can classify a customer more specifically and run more coordinated plays and more coordinated efforts against those accounts. But help me understand, how do these cohorts get put into motion with those teams?
You said a few things, right? Natural cohorts, they exist. They form themselves. You did say simple. We agree with those things, right? So the software industry has always known that there's potential value in this data. It's just very large. It doesn't have business context. And so classic approaches were, hey, let's take a sample. Let's merge that in with NPS. And the second that analysis is done, it's already out of date. It's brittle. Yeah. It's biased because you're coming at what do you think the right usage level is? And so what this presents itself as the great opportunity to use unsupervised AI. You can find just the natural range of patterns that exist through billions or even trillions of telemetry events. And so what Craig and I did is we used several sites and looked at cohorts AI deployment. And we would find that, some customers would have 5 cohorts, some customers would have 9, even 11. Generally speaking, if you have 9 or 11 usage patterns, that means you got some friction in your customer journey, right? You've got these isolated usage patterns that customers aren't getting into these other parts of the product. That could be, a challenging acquisition that would made. That could be a feature set that customers just go in and use that part of the tool, but then you charge them a bunch of money for that. And there's just not the value case to renew at that price point. And so what we're really seeing is there's this sweet spot, this Goldilocks zone between having 5 and 7 cohorts. We just brought a security customer online, $1.1 billion AR company. They have 6 cohorts. We had another customer that, 140 million AR business, they had 9. Yeah. And there were some pretty acute challenges that they were working through. And how do you break down those silos of friction, how customers are using your product and build some paths between those. And so the goal is to actually create less usage patterns.
That's what I was going to ask you is 9, would that indicate that there's tremendous variation in how they're using and that you'd see a more mature business, right? $1.1 billion business only having 6 kind of consumption patterns. To me, that would speak to, ideally you want that lower number, not low, but lower number versus tons of different usage patterns, right?
I mean, it represents coherent design, coherent acquisitions, coherent product development. There's a system there. And I want to come back to your simplicity statement. When you show up and you're informed by cohorts and you know that customer usage pattern, what it means for your business and what it means for them, and you know the features that they should be using because their nearest neighbor that had a great thing happen, they use these features incremental to that given customer's cohort, their specific usage pattern. They like that. They want to spend time with organizations that can perceive and feel their usage. But if you can't see it, you can't shape it. And so the best in class that we see, clearly, we're really happy with our customer base, but they're using our cohorts AI product to understand how AR is distributed across these usage patterns. Which of those cohorts are in the zone of contraction? Which of those cohorts are in the zone of expansion? Yep. And Craig hit the nail on the head. You gamify it. How can you engineer cohort shift? When you move, and our cohorts AI product generates A, B, C, D, E, F, the higher you go, the more shallow, the more sporadic, the more volatile, in a lot of cases, the usage pattern is for how it performs for the business, i.e. bad. When you can see and place specific customers in those cohorts, you can develop these very tailored paths into how can you bring them into a higher order cohort. And your business becomes more predictable because they spend relative to the value that they get from a software product, and that really helps build those bridges. So when we start to look at best in class, they're really going full bore and engineering account growth. And, that's the name of the research that we put together by stimulating cohort shift through scaled nurtures, through targeted role-based engagements, all based on what features is this customer using or struggling with, and how do we change course?
Got it. No, that's really helpful. And maybe just one question came to mind as you went through that, Dan. And it's, I think there's maybe a certain level of nuance in how we think about these product consumption patterns and what you do with it commercially, right? Is this a retention issue? Is this an expansion opportunity? But what you guys found with not only the research, but just a lot of the experience you've had with your customers is it seems obvious that, of course, the more they use the product, the healthier they should be. But I think there's some nuance in that statement that oftentimes gets overlooked by certain customers. What are you finding are sort of these points of oversight, if you will, with how businesses tend to think about and use that telemetry data?
There's a ton of signal. There's a ton of noise.
Yeah.
Right. So if you have a platform that has 1,000 features, you have an engineering and a product team that built all those features. They all think they're great. And they all have their own form of utility. But what are the subset of those features that actually drive customers into a higher order usage pattern? What are those growth features? What are these features of volatility? What are these bridge features that establish the right usage pattern and create opportunities for growth? You need to understand those essential features through cohorts so that you can effectively map your customer journey and reinforce certain process, certain content, certain engagements to really hit at those key features, because you just can't do that for thousands of features.
Yeah.
There's not enough resources, not enough time. Even with AI, the customer on the other side of that can't be nurtured through hundreds or thousands of features simultaneously. They need to know what they need to focus on within the capabilities of the platform. That's how you create that context.
Got it. No, that's helpful. Craig, maybe one last question for you. We focused, I think, a bit more on kind of the churn side, maybe more of the sort of downside, risk mitigation, if you will. But there's powerful use cases here from account expansion standpoints. What'd you guys find? What's indicative of expansion opportunities? How can we leverage these types of very significant amount of potential signals to determine where expansion opportunities exist, and then how do you go prosecute those?
Yeah. So one of the things we can do with cohorts that's really powerful is you can see expansion opportunities that exist within accounts. So who are those power users? Who are those enthusiastic adopters? And it helps coordinate between usually a CSM and an AM team where there's no question who should be engaging with this account primarily. Like it's clear this is a growth opportunity.
Yep.
In most cases, let the AM take it. So it reduces that channel conflict that is so unfortunately common. The other thing you can do, which helps these growth opportunities, is you can see the trajectory of an account. Like Dan was saying, you can see these cohort shifts, this movement. And if you see an account that's even fairly new, that's showing rapid positive cohort shift, it tells you, focus your growth efforts here. And these are accounts that they're going to grow with you, and you can get on that train early to really grow that account. Which is this, like you mentioned, the churn and growth aspects combined. This is why companies taking this approach are seeing 5% boosts in NRR. The cohort approach completely reverses those NRR declines we mentioned at the start of the podcast to the point where they not only reverse them, they go net positive.
Yeah.
So being able to see those growths, it really does help.
No, that's fantastic. And I love the notion of the speed of the shift, right? We're talking about some dynamics around both consistency, but also sort of speed or velocity to which those
Exactly.
positive moves happen, and those being very indicative signals of expansion opportunities, and to, pounce while the opportunity is warm in that regard. But no, that's great, Craig. So you both, thank you very much for going through some of the research. I know there's plenty more. We did not do this remote justice. I think you guys produced about 20 pages of research in the research report, and want to make sure I've got the title right here. So we're going to put this link down in the show notes here to allow any listeners to access that research. It's called Engineering SaaS Account Growth, which I think is just a fantastic piece. So thank you for that. And the second thing I'd be remiss for not mentioning is that SBI is now partnering with QuadSci as part of our WaveForge AI ecosystem and WaveForge capabilities, bringing, I think, really, Dan, just fantastic analytics from a product usage, product consumption standpoint into the mix as part of our overall WaveForge AI measurement systems, but also producing this very specific churn and expansion product that we're bringing to market as well. So we're thrilled to be partnering with you guys, and thanks for the partnership along the way here.
Yeah, it's an awesome collaboration.
And with that, thank you very much, everyone. Thanks, Craig. Thanks, Dan.
Thanks, Nick.
Thanks, Nick.